Good morning, traders. Happy Sunday. Got snowed on last night here. All of a sudden in Utah, it's gonna melt in like 3 minutes as soon as the sun comes up. But still, it's March 24th. I'm ready for spring. Good morning, Michael. Good to see you, sir. Good morning, Perry. We're gonna give it just a minute or two. So if you forgot your coffee, go grab it. And then we'll get cranking. Oh, Sundays. I love Sundays. The best day. How's everybody feeling? How's everyone trading? Good morning to you, Stephen. uh our setting up of SMS is complete. I have been delivered a video to watch that that gives me a tutorial on how to use it. So um yes, excited to have that coming out with some, I would say, improvements in. We're looking to shift. So with the alerts coming out this week, I would say we're going to look to make a shift away from Zoom and purely to Discord. Everything will be done via Discord, and then of course email and texts as you decide to allow it. Good morning, Greg. Good to see you. Glad to have you. All right, welcome to the Market Watch Group, weekly market prep. I'm Scott. Let's get started. Here are the disclaimers, as always. Illustrative and educational only. No advice or guidance. We are not brokers. We are not advisors. Today, we are going to run through the market posture. Let's make sure that we really look at everything with an objective, yet fairly granular perspective. Let's really make sure that we're seeing what we should be seeing right now, because overall, I'd say I'm bullish still, but I want to make sure that I'm not, right? Sometimes we just take a step back and say, am I seeing this market biased? Certainly, I know that, and you probably know as well, late March and April tend to be some of the best months cyclically. And so sometimes I wonder, do I let that overly influence me to expecting bullishness? I'm not saying I do. What I'm saying is let's just make sure we all keep each other honest here as a group. We'll look at the economic calendar. If anything feels light on our watch list, we'll do some sector searching today. We did some. We actually tried last week. I tried to do some homework. I got sucked away from it doing the text thing, trying to help with that. But we did some financials, so we might have a few of those to add. Stephen found a couple. Sandy, I don't see Sandy yet. Hopefully she's on her way. We'll make sure if we see what we think about a shopping list for next week. I think there's more likely to be a little bit of a consolidation, but we have to be ready at any given time, right? At any given time, you should have something that could be tradable if the market starts to move before you expect it. And we are moving on to routines this week, section 5. So yes, more than halfway through, working on the second half of the second pass this year on the trading plan. Let's go. Let's go. Okay, let's posture. Today is March the 24th. Additional upgrades will be the button to add this. Now that I'm gonna have, well, not quite yet, Stephen, because as we launch the alerts, that's probably gonna take a lot of my time. But I think everyone's looking forward to those. I am. Good morning, Bob. Good to see you. Okay, the gang's all here. All right, let's get cracking. So last week we dropped from a 6.75 to a 6, and we talked about the fact that anything that's 1 week for less than 1 point in drop, we're gonna just assume is like, okay, we'll see. If something ever drops like a point and a half to 2 points in a week, that's gonna be, or it goes up that much, that's significant. A lot of favorable things have to happen for that much uh, um, of a score change, right? Especially now, if you're early in your scoring, maybe as you're dialing it in. But once you have your score dialed in, yeah, that's significant. If this week we came and we're like, whoa, now we're 5.25, then I'd be like, yeah, it seems like something's going on. We went from a 7 to a 6.75. That's nothing. Then it went to a 6. Well, we're still okay. So this week's important to see, do we continue drifting and we're starting to be more concerned? Do we stabilize and think we're okay? Do we rise and think that it is right back the way it should be? That's where we are. So, all right. Long-term trend. We know this one is just unlikely to change anytime soon. Hi, Sandy. Glad you can make it. Not only, remember we said this doesn't necessarily mean we're coming down when we see this. We had two red doji candles, and then all of a sudden, bam, we're off again. We're up again. I even said this thing could drop all the way back down towards this red line, and all we're going to do is watch it because we're scoring the red lines right now. Aren't we? Or no, did we do maybe that was a 1.25, and we're now looking to see if it's going to get a little faster still. Maybe even a slightly faster, but it could get mostly back down there, and I wouldn't change the score at all. This score is going to be pretty fixed for at least, unless things have drastic falls, 5 to 6 weeks before we even think about it, quite honestly. So that's long-term trend. Out of curiosity, this is how we're going to kind of check and balance each other. Where is everybody on their long-term trend rate? I'm at a 1.5. Are you higher, lower? Nowhere near it? Is anybody negative? I hope not. If you're negative, you haven't been listening. Sames. Okay. Let me know if different. As we're going through these, a couple of things. As we're going through these, if there's like a subtle, nuanced question you've been wanting to ask about any particular analysis, ask it. Let's have that discussion. Secondly, I'm going to say it again when I leave. Time change this week, Monday, Wednesday. We're going to meet post opening range. Post opening range. So we have opening times, and then we have post opening range, which means we're going to go about 10:05 a.m. on Monday and Wednesday. 10:05 Monday and Wednesday. Post opening range. I'll send an email and I'll put up a slide. So if you come early, it'll just have to go kill some time and come back. All right. Short term. Short term. This one could be interesting. Nope, that's a little too short. Okay, so last week we dropped our score. Only 1/4 point because it broke down out of our trend that we had been in for so long. Now, when it breaks the trend, we don't think, oh, it broke the trend, now we're bearish. That's not what we think at all. because it broke what we had established as trend line that it had been moving in. Okay, all we're doing now is reestablishing, and you can see that it broke down, stayed 2 days later, 3 days later, and we're right back in. The problem is we're right back in, but we're not back. Let me draw a different line. This is what I was thinking. Tell me, because as I mentioned, we actually had this whole period already where we didn't get back up into the high of the trend. We stayed in this trend line, but we were really kind of grinding along the lower end of it. Okay. So as we look at this now, if we just connect all of these dots here, it's not the same trend, right? And it looks like if this was it, might look something. Now I missed it there. Let's try here like this. Something like that. And that's more 1.25. Well, excuse me, 1.5. Sorry, not 1.25. That's more 1.5. Right? So I don't know yet that I have enough to make that determination. But when things break out of one trend, it doesn't mean that it's reversing trend. It could be just trends slowing down, like this would be a deceleration. It's slowing a little bit. I feel like for me, I don't have enough information to make this yet. The fact that we moved back into that old trend so quickly, I feel like, that's good. I'm not going to give it 1/4 point up. Actually, no, I am. I'm sorry. I changed my mind. I am going to give it that 1/4 point back. Because this was my thought, we not only broke back in here, but we then made a higher high here. So what we lost, we regained for now. That's my thought. Agree, disagree? I'm going back to it too. Where's your short term? How are you seeing it? What am I missing? Who wants to play devil's advocate? That's what we're trying to do here. What am I missing? Right? We took the point, we took it away here, and we gave it back here. And when you look at where we are, well, we're at a new high. So I'm like, okay, buyers, I give you your 1/4 point back. 2 it is, Bob says. Anyone else? If you disagree, if no one wants to play devil's advocate, I'm going to assume that I didn't allow a bias, in your opinion, to influence my perspective. 2 is reasonable. That's all we're looking for. Press, that's the word that we're looking for, right? Is it reasonable? Or are we up in the night with bias floating around influencing us? All right, love it. Also, Press, I didn't even see you sneak in, man. It's good to see you. How did your thing go last weekend? I hope it was wildly successful. Let's get amazing. All right. Also, I'm sure it was draining. Love it. Not enough to convince you to change the score yet, Stephen. Congratulations. Glad to hear it. Keep us posted on ongoing efforts. Okay, let's keep going. Let's get to volume now. Okay, so volume. Let's talk about volume. Volume's been interesting. It's stayed positive. And we had a good discussion about it last week. And I mentioned how, if there's ever a time where it's really coming down to what you're scoring it, I will allow just very as like a check and balance. I will allow the relative height at the end of the period to the beginning of the period, meaning are we up or down? Because I don't want to be like, oh, it looks so negative. If that month has been bullish, it's hard to be like, oh, the sellers are I mean, maybe if the sellers have just like really started to take over late in the game, then yeah, score it as you should score it. But okay, so we last week we stayed the same. We thought we were gonna drop it, but we stayed the same. And we have come down from a 0.5. Okay, so let's see where that puts us now. Let me move my volume out of the way. Let's put some let's put some boxes in. This is an interesting one right here. And we did get volume here. I don't think that's enough though, because we dropped from basically 22 to 521 dollars, basically a same. So that one for me, I'm gonna say that's a wash. That's a nobody. That's what that sign means. I'm actually gonna say that the same thing happened here. And then clearly that was a seller's day. And I think we did get buyers the next day, early on Monday. Okay. We'll put an average day here, an average day here. Here. And we've got a couple here. Okay. Buyers, buyers, buyers. Sellers, sellers. Okay, what do I have here? I've got 4-3 for the buyers. 4-3 for the buyers. I've got 2-2 in the, right? So if I break this up into areas, it's like this is over here. That's kind of getting stale. This is more relevant. So the more relevant is 2-2. We know tie goes to the buyers. I'm gonna leave it at a 0.25. I don't know. I don't feel like it's enough to raise the score. What does that feel like to you? 0.25? Feels like a 0.25 to me. I actually thought I might have raised that, I think, when I looked at it Friday. I thought, oh, this might go up. But I don't, as I look at it, I think clearly the buyers are still showing more, which is good, because at a certain point, that's the volume's just going to look neutral, I think, and the volume but the market can just still keep trending. That just means that we don't see like pressures from the sellers coming in. So yeah, I'm going to leave mine alone. Okay, let's keep going. We're moving well today. Leave it at 0.25. Michael says, love it. We have agreement. Let's go to major market. Let's refresh this just in case. Okay. So it's interesting because at this point, we're almost with our 200 days, we're almost to the point where we don't see any of the bullishness from last summer, where we start from the late summer fall correction, and then what's happened since then. Where are we? NASDAQ leading, S&P giving us watermark, the Dow behind. And on this perspective, because the Russell got beat up so much worse than everybody else during that correction in the late summer, early fall, it had a lot more work to do. So, but we've seen it do that work. So now this itself starts bullish. When we drop down here, we see that the Russell, now we are just catching the tail end of the correction. September, October, we bottom. Since we've come out of that, in the bullishness that we see now, who's leading? NASDAQ. Great. Technology leading. We feel good about that. S&P in the middle. Now, what do we have? We have the Dow behind, and we have the Russell behind. But the Russell's done a lot of work to catch back up. Even moved into a little bit of a leadership position when things got a bit overblown back in December, when a few crazy people thought we were going to see interest rates drop by 2% this year. And we're like, oh yeah, that's not going to happen. Right. And that caused this little hang up here in the middle, which we're going to see next. Overall, still bullish, not quite like full bullish, right? It's yes, we see the small caps moving into position, but I don't think we would make the argument that it has necessarily moved into position. Moving, not moved. And here you can kind of see more of the same, right? Where a lot of interesting correlation between the Dow and the Russell, that over these periods of time, they're basically going to the same place, but they're taking very different journeys. You can see there's a lot of volatility in the small caps that the Dow just doesn't have. But again, what does this show me? Yeah, it shows me that things look bullish. I see now when we interpret this, you can see that small caps have moved into a better position since their own little hiccup when we realized that interest rates are not going to move the way people were thinking in order for the small caps to rally the way that they did. But since then, they've recovered quite well, and the Dow has really shown a little bit more sideways. And we've talked about the fact that the Dow is hard to push continually bullish, keeping pace with everybody else. That's why we expect it in a bull market to settle into a lagging position. If everybody else is getting 15, 12%, they're getting 7, 8. Why? Because it's hard to push those 30 behemoths. You can't push them 15% as easy as you can these other things. It's just, there's not enough money for it. So that's our concern. Let's go look. So I'm looking at this thinking it looks bullish. But it looks like herding elephants, Bob. I love that. Oh, it's a great phrase. 100%. Phenomenal. Reduced it. Okay. So Steven said NASDAQ dropped into second relative to the S&P. So every now and again, I see why you would possibly do that. Every now and again, the S&P does move. I don't see any negative implications from that, though. If the Dow's moving in, it's like, whoa, that's more people posturing defensively, moving money into safer places at a faster rate. But the S&P on it is an anomaly. It is a little interesting, but I don't know that it reduces. So you drop to a half, and that's exactly what we've been talking about. Press said Apple dragging it down, right? Apple is 11% of the NASDAQ and only 6% or 5% of the S&P. So, okay. So what Steven said is he must have been at a tie. He wasn't sure what to do here. When I get here, relative to the score I have now, I think, yes, the NASDAQ is leading and the Russell has shown enough strength that I see that as a 0.75. If the Russell moves into a leading position on the other side of the Dow, then I'll move it to a 1 and say that's strong. That's what I'm looking for. But for me, this looks bullish, and I'm going to leave it at 0.75. If you're at a 0.5, or if you were at a 0.75, big split. Okay. Michael's dropped his to a 0.5. Let's go to the 22. For me, if you were on the fence, this would actually push you to a higher score. So if you were thinking, I don't know, 0.5 or 0.75, let's let the 22 decide. On the 22, the Russell's leading, the S&P in the middle, NASDAQ is here, which means what? Sometimes we have the NASDAQ leading and the Russell slightly behind, but that's kind of mark in the middle. Okay. Steven was a 1. He dropped it to a 0.75. That makes sense to me. 0.75 to a 0.5 also makes sense to me. If it's hard to call this a 1, right? I think it's hard to call it a 1. It's definitely stronger than a 0.25. So that, right? I mean, I think we find ourselves reasonably, rationally, logically, as you talk through it, kind of saying, yeah, okay, what do we have? What do we not have? What would it need to be here or there? I think if you're a 0.5, 0.75, that's a good read. No, Michael, I'm not trying to convince you. I think 0.5 is right in the same vein. It's not really hard to make the argument. I think that's where we are, somewhere in a 0.5 to 0.75. I like that we have pretty good alignment with this. Let's go to sectors. So I'm not changing mine. Sectors. We had dropped it last week. It dropped from a 1 to a 0.75. So does it get it back? Does it stay there? I mean, I know we're going to raise the VIX at least a quarter, possibly a half. So I still think we're going to end up, back near 675, something along those lines. So, okay, let's see. Here we are. What do we have at the 200? Communication services, technology, financials. One step lower, industrials. Those are our big 4. Consumer discretionary is the 5th. And for a minute or two, we had some healthcare. What's the concern? The concern, discretionary, is a bit sideways. We've lost some momentum there. And when that happens, we say, hey, we're not firing on all pistons. We can't give it a 1. 1 is the best. If we don't have discretionary, if we don't have all 5, it's not the best. It's that simple. So we dropped it. What else do we have as concerns? We don't love the surge of energy and materials. It doesn't stand out here, but you can see that they've moved into leading secondary positions. Healthcare's there, energy's there, discretion, like all those in a bunch. The good news is staples and utilities, are most defensive of sectors, are still in lagging position. So there's no concern there. 133. What do we have? Technology, communication services, financials, industrials. What an elite group of sectors. Somewhat snooty, and they see themselves above the others, and I'm okay with that. I give them that leeway. They have to lead. Then we have materials. We don't love materials surging like that. That doesn't help inflation, right? I mean, is it like, oh man, we're so bearish now? No, like it's going to put pressures. The longer it stays up there right now, like if it just all of a sudden turned and came back down, would we be like, oh, okay, no big deal? That's probably not going to have much broad impact. Yes. But if it stays and keeps pushing and stays high, that's when we're like, that might kick our can for interest rates down the road because it will result in inflationary pressures. Same thing with energy, right? And as Bob notes, discretionary, that's what got us down here. It got us down here before when we dropped it. We were a 1, and then way back here in December, we're like, it's a 1, it's magical. And then we had the discretionary drop and we lost it. And then it tried to come back, and we're like, okay, if it comes back, we move it back to a 1. But if it drops out again, like it did. Now, it did drop out, but we did at least see it make a little bit of a late surge. We'll see. We'll see. Let's go to 66. What is the story here? What's the narrative? Communication services. Beautiful. Google and Facebook. I'll trade them all the time. I love trading those two. Magical. Okay. Netflix, throw it in there. I mean, there's some good ones in the communication services. Who else is up in this area? Financials have been so strong. We've done very well with financials, very well with industrials. Oh, what's the problem though? Energy? Come on. Come on. Now, technology's still there. Our big four are still there. You can see healthcare it's kind of hanging out, but it's gone real flat. There's energy and materials surging. Staples, it's we don't love staples here with discretionary here. That's a bit problematic as well. So we're starting to see some things here. Now, I don't know. I think I might drop this Stephen, you increased yours, huh? I'm a little thinking I'm gonna drop mine. So here's what I don't love. Let's talk through this. I need feedback. Everybody who's been analyzing this, be ready. Love communication services, love financials, love industrials. That's very strong right there. That alone, that's a 0.5 right there, those three. Technology's close enough, but I feel like technology being close enough and energy having passed it, I'm like, do those two cancel each other out and I'm still at a 0.5? Healthcare's turned sideways, still at a 0.5. I don't love the surge in materials. And then the fact that staples is here and discretionary is here. I feel like there's some subtle concerns. 0.5 was still bullish. It's still bullish. But remember that a 1 is the most bullish. That's literally what you would consider the perfect sector rotation analysis. Everything is bullish. We're clearly not that. So 0.75. 0.75 is pretty bullish still, but it's like 5 strong sectors. Maybe one's a little wavery, right? Yeah. You know what? Press says 0.5. I kind of feel it. Like I wasn't expecting it, but I think the biggest thing for me on the 66 day is this shift here between discretionary and staples, where it's like, wait a second, man. If that cleans up, we'll go back to a 0.75. No problem. No problem. Let's go to the 22 just to see. I feel like I am dropped. Now you look at the 22 and what's the problem here? Energy at the top, materials at the top. If you remember, we started voicing concerns of this, 3 weeks ago? And now where are they? At the top. We've been mentioning this. We've talked about this. It's a little bit coming to fruition. Don't love it. And it's not panicky, but we're just like, hey, yeah, you still have your industrials, your financials, utilities is all of a sudden up a little bit up in the area. So yeah, you know what? There's some concern. Let's make sure we address that concern. 0.5. Interesting. It's been an interesting one today, I feel like. Last thing, volatility. I love this. I've been feeling like I want to try to get done with like 20, 25 minutes to go. So this should be done with 20 minutes left. Nice. Makes sense, Steven. Makes sense. The big thing that we're looking for here is not, are we following a formula, but but the question is, does the score match the market? That's what we're asking. Does it match the market? Yeah, okay, that's it. I feel like we can all make that justification. What happened here this week? We had a lower high. Where's my drawing tools? So, this is where we were. This is green. Okay, so this is where we were to start the week, right here. What had just happened? We had just had a higher low. I had put on a hedge and was holding the hedge. That was Thursday, Friday, the week prior. And if you remember, I said I would love to lose on this hedge. Not I would love to lose a lot. Not like I'm not, like, oh, I love taking losses. That's not it. But why? Because taking that loss would mean that we might get a lower high here. This one dropping down to that one, lower high there. Followed by what? Followed by a lower low. We took out this low. We took out this low. And we even tested down to these lows. Definitely a quarter of a point here. Boom, boom, right? Quarter of a point for that lower high. Tried to get up and it couldn't get up as high, and then it rolled over. And quarter of a point for the lower low. There's no hedge setup developing right now or anything along those lines. We just simply are we saw the institutions really shed in a way that they hadn't for a while. So there's not much fear. We're at 13 again. 13. It's a great place to be. But we did say, hey, there's a chance that this week, starting this week, what does this look like? It looks like we could go up 2 or 3 days, possibly. Before what? Before turning back down. Well, this would be another lower high, which would give you another 0.25. And that basically is, at this point, that's what we would be hoping for, which is our April rally, of course. This is all in line with the cyclical. But at that point, I'm as high as I'm probably going to go. That's as good as the VIX looks. We're low. We're pushing lower. Volatility is low, and we are all set to try to do calendar spreads in the summer when things go sideways with a low volatility pause bullish market. Yeah, that would be fantastic. I think we'd have a great time. However, for now, I'm going to just raise this up. I got a nice week. I got two things accomplished: lower high, lower low. So 1.5 was my score. I raised that up, and I am 6.5. So what happened? The short term went up a quarter of a point. The sector rotation dropped a quarter of a point. And the volatility Went up a half of a point, 6.5. Yeah, that looks great. Great score. Looks good. In line, 675. Let me know if anyone is if you're below. I think you could possibly find yourself in the high fives. I've spoken with a couple of people who were. They made good arguments. I mean, I don't see it that way, but they made good enough arguments that make sense for them to trade it that way. 625. Love it. Love it. Bullish market. All right, let's go look at our watch list. Oh no, let's do a couple of other things real fast. Economic calendar. Yeah, VIX looked good being lower for sure, didn't it? Michael, I agree. What do we have this week? Actually a big one, but not till the end of the week. Monday, we have new home sales expected to be a little higher. Lisa Cook, Fed, nobody expecting anything there. Durable goods on Tuesday. Consumer confidence is supposed to come in basically at where it was. I wouldn't be surprised if we see it jump into 108, 109 territory. Christopher Waller on Wednesday. No one's going to care about what he says either. You'll see why. Thursday, jobless claims and the second revision of GDP for Q4. Expectations are that it stays at 3.2. 3.2 is a good number. We also have this consumer sentiment number. Then on Friday, we have income and spending. We have PCE, which is one of the Fed's favored inflationary measures. And you can see that it is 2.5 and 2.8 for the year, but there is a slight expectation of a tick up in February on both year over year and the monthly. So we'll see how the market responds to that. It's already expected. And then later that morning, Jerome Powell speaks. So Friday, we could maybe drift. Maybe we have a little bit of a pullback Monday, Tuesday, Wednesday. It starts to, find some support Thursday, and maybe Friday, the PCE is the catalyst. And it doesn't have to be great numbers, right? How many times have we seen numbers where we're like, oh, those were disappointing, and the market still bounced? That's the point, right? It doesn't have to be like, oh, we're waiting for phenomenal numbers to. No, actually, I think we're just waiting for numbers that, if they're in line, if it comes back a tick below, it's already been forecasted that way. That's not a negative surprise. It is a worse than expected reading, but that's not going to jolt the market. The market has no problem processing that. So that's what we have coming out this week. Speaking of the Fed, that doesn't seem right. Reload. Is that right? It is right. 38 days, 3.5 weeks till our next Fed meeting. What are the expectations? We have about 7-1 odds against. So a small probability that we get a rate cut in May. I don't think any of us are looking for that. Michael says he doesn't think so. Housing's looking better. I agree. I think June gives them the ability to hit it, watch it, hit it, watch it, hit it. Three times. Every time, just see what happens. Right? When you leapfrog, you give yourself 3 months in between to just kind of watch and see. Right? They hit it, watch and see. Now, if they hit it in June, remember, we already said we think May is going to start going a little sideways. Sell in May, go away. But if they hit it in June, that might give us a little catalyst, which we actually tend to see anyways. And then it tends to go sideways again. And that might happen as we watch them do nothing in July. And then, boom, September kicks off. I'm feeling it's going to be a bullish year. I'm calling it out. I'm calling it out. I usually don't call it out for that period of time, but I am this time. Okay, let's go look at our watch list and see how everything looks. What's gonna give us? I'll get my note card ready. And there we go. What do we think? I'm putting Apple on my list, actually. I think this looks fine. Yes, the DOJ initiated suit. It's not that big of a deal. What happened here? We came down, we got enough. I said it would be better if it could get up into here. It got pretty close. It definitely got near enough to the underside of this for me that if this holds and this turns and this thing bounces, I would consider it. I'm not saying I'm definitely going to. I would consider it. It depends on how clean this trade is. If it looks like this by the time I see it, I'm not going to do anything but keep watching it, right? But if I could find a nice clean entry where I can get 3-1 on a trade, yeah, then I would think about it. So I'm putting it on my list. You might think, Scott, it's under the 50. I'm not doing it. Great. That's your rule. That's your rule. Don't do it. AIG starting a consolidation that might only last 2 or 3 days, which means it should be on our list for this week, right? AMD holding the 50. Stochastics is oversold. Looks like it's trying to move out. Would I want to do anticipatory on this? I'd probably say not at this point. I would be more comfortable waiting until this took out not necessarily the highs, but maybe the body, the open of yesterday. If the sellers can push it through here, you know, and you can trigger a stop. I think you can get 2-1 at the old high, 3-1 at a slightly new high, although it's actually still this one. But yeah, I think that there's a possibility for a trade there. So I'm gonna put it on my list for this week. This week's list. Okay. Amazon. That's tough. It's kind of grinding a little bit, right? You can see that we've moved into this. The little choppy. I'm gonna hold off at this point. I don't feel like, I don't know. Even if it pulled back down to here, I feel like it's still kind of in this little base. I'd rather see it break out and do that and then say, all right, let's go. If you love Amazon, then it's still viable because it is still above its 50-day. I think. I'm not putting it on. AXP definitely putting it on. Love Financials, been doing great with them. Just made a new high. Looks like it could be pulling back. I would say I have a zone for entry anywhere through here. Right? And here's the thing for me. If we actually went below this, but we stayed above the 50, I would give it a secondary zone here. Right? Like anything setting up in that. So if you notice back here, we took out this low, but it actually stayed above the 50. That's a phenomenal point to get in, right? Phenomenal. Okay. Right now we're looking at it like this. We just made a new high. It's starting to pull back. We're looking for this window right here. That's exactly what I just drew, right? That's the correlation. I hope that makes sense. Boeing, still trash. Monitor in TOS shows a few positions show activity in off hours. Like right now, off hours? I mean, Sunday, yeah, I don't know, actually. There shouldn't be. BAC? Is anything 24/7? I thought it's only 24/5 and it doesn't start until like 5 p.m. Eastern. Huh. Yeah, I don't know. BLDR, I love BLDR. Could be a 2 or 3 day pullback on the list. That is an industrials. We love it. City on the list, financials. That flag could be only 2 or 3 days, so we need it on this week's potential list, right? Caterpillar. You can see we've got some real strong industrial and financial stocks early in our watch list. CMG. I actually am putting this on the list. CMG popped up because of a 50-to-1 split. Obviously, the trend looks phenomenal. So if this thing pulls back now and then rallies again on pre-split momentum, fabulous. We're here for it. COF. We can't even get out of the C's, and we've got 8 stocks on our list already. COP. I'm putting it on the list. You got to have some oil on your list. If oil consolidates and then breaks again, if it's going to break again, great, trade it. Costco. Costco's a little bit in a flounder. It's struggling here. I'm gonna leave it off, actually. I don't know that I would put this trade on. It like did this and then it tried again. That was its second try, and it's just sort of failing to go. That's concerning. I'm gonna hold off on that. CrowdStrike. CrowdStrike was on the list. It's on its second attempt. CrowdStrike is in a place where if it can't get above here, it's gonna maybe even be kicked off the watch list. I'm gonna leave it on the watch list, but I'm gonna hold off right now, putting it on our short list for this week's trading. Tell me if you think I'm missing one. Same thing with this. That's no way to end a week with a big bearish engulfing as it tries to bounce off the 50, right? Delta, put it on the list. Consumer discretionary, we'd love to see this thing. Or do they consider Delta industrials? I can't remember now. I might be off on where they're putting that these days. That one's a bit fluid, if you ask me. How expensive will options be on a $2,000 stock? Real expensive. Spread trades. That's how we can do it. Yeah, if you're buying an option, you'd literally have to be like 250 out of the money. And I mean, it's insane to try to get where you could, but you could do spread trades with it. So that's a good one for us to look at tomorrow. No, Tuesday press. Tuesday evening is a working session on spreads. I think it is, isn't it? That sounds right. Yeah. Debit spread. Oh, maybe not. Maybe it's I don't know. We're still on spreads, but yes. Yes, that's a great one for us to play with. DHI. Put it on the list. Anything that's already flagging or looks like it could flag this week is essentially what we're looking for on our short list. I'd put the Dow. I mean, if you want to trade an ETF that's, it's steady, but you can put it. Actually, no, I'm not going to do it. You might. I'm going to leave it off on mine. Sorry. Ford got to the same high, but not a new high, so we'll keep an eye on that. Fastenal, another strong industrial stock. GBTC, I'm going to keep it there because it only had one. It had a false start, right? It tried to go, boom, sputtered. If it goes again, still valid. If it sputters again, then we're worried about it moving into consolidative periods. GE still strong. Gold still strong. Google. Yeah, weekend trading with Bitcoin definitely is happening. Google. I mean, it's just so overextended on its, we thought we were going to catch it. It did this V, and we thought right here, this is where we were going to catch it. And then it just sort of gapped out of it. I don't think there's anything I can do on this one yet. We're this close to the old high. I think you got to kind of let this thing cup and handle at this point if that's what's going to come next. Cup. That I would trade. And then if we can break out, then we're looking for the cup and handle to happen again, right? Like That's the expectation. All right. All right. Home Depot, yes. And that would be great. We're to see consumer discretionary come back in. IBM, yes. So this weekly list. I'm gonna keep the list the same instead of. I think there's been times where I've adapted the list. Basically, if I'm gonna have 1 week list. This is our list for the week that it'll be in every email. This is the list that alerts will come from. IBM is on the list. Intel is not on the list. IWM is maybe. Let's put it on there. If it can make a higher low, let's give it a look. JP Morgan definitely on the list. Real strength in financials right now. Meta on the list. We know that communication services is strong. This looks great still. Microsoft is on the list. Love it. The list is broad. Netflix is kind of grinding at this point. I'm going to leave it off because of its grind. But it is on the list. I mean, it does still look bullish. It's not like it's not bullish. Nvidia, it's strong. It's hard to put it on the list right now. It gave a signal already, right? It gave a signal already. Okay. It's hard not to put Nvidia on your list, but it's just not there now, right? For me, sorry, I'm not putting it on. A car, I don't see it tradable this week. The car, yes. PLTR, still yes. For me, it's struggling. It hasn't failed yet, but it's struggling, and it gets one mulligan, right? So if it stabilizes, or even if it gets to here, one mulligan. Hughes looks bullish. SMCI, I'm still gonna have it on my list, but it's a crazy stock. Here's the SPY, still looks good. SPY is tradable, in my opinion, always. Love trading the SPY. TSM, it's hard. That one's hard too. I mean, it's kind of just getting started. I guess I would consider that one still viable as a continuation trade. Here's the VIX. Okay. Here is waste management. A little, I'd put it there. Waste management. I think it's a grinder. I think we've got better looking industrials. Walmart, yes. Man, I had to flip my card over. I didn't give myself enough room. Walmart and XBI's struggling. Materials is not, but we would like to see it start struggling. We'd love to see it break here this week. Oh, that would be fantastic. I'm going to voodoo it that way. Communication services, increasing strength. Energy, we'd love to see it consolidate. Financials looks good. Little pullback, that's fine. Setting up, pullback, setting up. A lot of setups starting to develop. Staples actually had a same high, so that's not bad to see a little bit of slowdown there. Same thing, slowing down. I feel like things look great. The watch list looks great. Even consumer discretionary's trying. Yeah, that's where I am. Our posture increased. It's bullish in a great place. Watch list is strong. The weekly list of tradables looks fantastic. I think that we have a great chance to see consolidative action followed by a bullish trading window. The alerts, including text, is ready to go. Bob, yeah, life is good, man. Listen to it all. What do we have to complain about? What do we have? It's Easter weekend next. Okay, so let's a quick reminder. it is Easter weekend, which means we are going to have Good Friday, no market on Friday. I didn't even think about that. So yeah, we have quite a different schedule this week. Quite a different schedule this week. I will be posting about it on Discord. I will make sure to update each day on emails. But what that means is that Thursday will be our weekly market wrap. Thursday. Yeah. I believe, let me just take a look. I hope I don't have. Okay. Yeah, we'll have to see what the Thursday schedule looks like. We may actually do a midday on Thursday. Options, yeah, the Thursday may even be earlier in the day. Let me look at that, but it is going to be Thursday market wrap, not Friday. Hopefully I can get it at a time when everyone can get there. I might have a end of hour conflict. So, but yeah, we're going to meet twice on Thursday. We'll have a market wrap sometime, and we'll have yeah, and we'll go from there. Okay. Last thing. But we are starting late tomorrow morning. That's the other thing. Tomorrow morning start time, 10:05 a.m. Post opening range. We'll go from 10:05 for most of the hour on both Monday and Wednesday. So if you show up at 9:15 a.m., you'll see a slide that says, come back in 45 minutes. All right. Lastly, this week's trading plan section is routines. Routine, section 5. Do you have your daily routines marked out? Before market, during market, after market? Do you have your weekly like we do now? We've done market posture. We've done watch list maintenance. We've done short list creation. Have you done record keeping? Have you done have you done analytics? Right? Have you done trade management for Monday? Like, there's a lot of things that we can be doing. Make sure you watch the video. And daily and weekly routines are the most important. The monthly and the quarterly are just, trading plan work, analytical work, things like that. All right. Any other questions? 50 minutes late Monday and Wednesday, press. That's exactly right. 50 minutes. There'll be a message about it in Discord. It'll be in your emails. I'll remind you through the week. And then due to Good Friday, we're going to move the Friday afternoon to sometime. It may actually be like in the more midday on Thursday. We'll see what it looks like. All right. Thanks, everybody. Enjoy the rest of your Sunday. As always, happy trading.